A very good evening to our guest speaker, partners, and everyone joining us live today on the Zoom platform and YouTube Live from all around the world for today's business event organized by the Pezetu Kenya community in partnership with WorkPay Africa, Wezesha Kenya, and Mr. and Miss USIU Africa. I want to officially welcome you all and kindly request those joining us on the Zoom platform to please mute their microphones at all times unless called upon to speak. My name is Benson Odhiambo Mbogo, and I will be moderating today's interactions and discussions with the help of my able co-host, Mercy Nyaga. Now, Pezetu is an initiative housed under Ilmo Ventures, an organization that aims to invest in young people through a series of practical training, storytelling, and providing needed resources that empowers them to create opportunities rather for themselves and future generations. We aim to empower millennials and the youths, both men and women, to have deep knowledge of financial matters that drive financial health and long-term financial wealth. Pezetu is run and championed by university students themselves, willing to be part of driving change and self-driven opportunities without waiting to be spoon-fed by anyone or the society. We are building a financial literacy movement for university students and millennials. Ladies and gentlemen, today we are glad to host one accomplished entrepreneur by the name of Peter Nguni. I'll just read his profile. Now, Mr. Peter Nguni is the founder of Alibad Venture Lab and the former president at BRIC. Alibad is a Nairobi-based venture lab that focuses on providing funding interventions and growth strategy to African companies. Alibad's mission is to catalyze investment in 100 companies in 10 years. BRIC is an African tech startup that builds rugged connectivity hardware. The team has been recognized as 2018 Time Magazine Top 50 Most Genius Companies, and you can find the original BRIC router displayed permanently at the MET Museum of Art in New York. Peter is a Kenyan entrepreneur, passionate about business strategies and investment in emerging markets. He's also the founder of the Global South think tank, GLOSOTT, and he believes that Africans are best positioned to chart their own path to solving many business challenges by leveraging their genius and localized solutions. Peter loves to travel, he's an adrenaline junkie, and a blogger about both. At this juncture, ladies and gentlemen, I would like to introduce Mr. Peter Nguni to give us a short speech rather on business funding as we continue with the meeting. Welcome, sir.
Thank you, Ben. Can you hear me?
Absolutely, loud and clear.
First of all, let's start by lowering that bar a little bit. You introduced me like that. I'm happy to be here. I'm really excited about this forum. When I got invited, we were chenganaing with the Pezetu team for a while, so I'm happy that this finally gets to happen. I think let's start with where I come from. I always want to remind people that I'm a farmer's kid. I grew up in Kajiado, all that other stuff, had to start from somewhere. My parents were farmers. My mom was a poultry farmer. My dad was a dairy farmer. If you ask me, I do not want to see another cow in my life because that's a full-time job. Chicken, you can throw some mahindi to them and leave them, but cows you have to milk, several times a day. It's a full-time job. I was lucky, to have had a very diverse upbringing. So my schools were always between Nairobi and places in Kajiado. I went to Lenana for high school, and I was fortunate enough to travel the world after that. My university happened in the US. Let me start by also saying that the university I went to in the US was a very crappy university. So I'm very proud of the guys who are doing the university here, because it's not all what it is drummed up to be, depending on where you go. Then I, after uni, I went into consulting, and some things led me into starting my first business. So I started my first business in Atlanta, Georgia, and it grew to 13 major cities in the US. Then after that, I started consulting in growth strategy to help companies grow. I will talk to you guys a little bit about how to grow companies. But when I came back to Kenya, I was very fortunate to be immediately immersed in the tech ecosystem, the startup ecosystem. I was president of Brick for 2 years. As you explained, Brick is a tech company that helps people get connectivity all over the continent. The project I was working on back then was putting Wi-Fi in matatus, so trying to get entertainment into public transport, malls. Then when I was there, I kind of was able to see how people were getting funding to their businesses, and that process itself got me very excited about trying to figure out how to fund businesses and to support young entrepreneurs in the country. It started out in Kenya. So Alibad started out in Kenya. Now we are working with companies in South Africa, in Nigeria, and our newest ventures are, African founded, African teams, but as far as Toronto now. So it's grown, and that shows kind of like where, Africans are doing business. I guess the one thing that if we were to start talking about funding, Ben and Marcy, is that good enough introduction of myself?
Absolutely.
Yes.
Okay, good. So let's actually build a company, right? Let's just all build a company and try and get it funded today. I think it will help us be a little bit more practical, right? So the first, if you were to, I'm gonna share my screen. Mr. Host, can you allow screen sharing? I promise you I won't be sharing for long. Is it Madam Host or Mr. Host? Okay, share screen, let's see.
Now you can share.
Okay, good.
Yeah, right.
Let's start here. Can you see my screen?
Absolutely.
Yes.
Brilliant. When it comes to funding, the question that all of us are asking is money, right? So I think from a perspective of an entrepreneur, you're looking for money, but I think the first thing we need to do is look at it from the perspective of a funding individual, right? The funding individual will see a lot of companies every single month. So when people know that you have money, I'm gonna assume, let's take today, I'm gonna start naming names, okay? So Ben and Marcy, today you're gonna be entrepreneurs starting a company. Ernest, because your name is next, you're gonna be the person who's giving the money. So if today the two entrepreneurs who we have here hear that Ernest has money and they have a company, what's the first thing they do? They all write them, hey, dear Ernest, we have a company, it's the coolest company. There's no other cool company like this one. We promise you it's the coolest company. So please fund us. That's kind of how it goes. So imagine Ernest as your funder is receiving a lot of those emails every day, right? So what we're going to try and do today is kind of talk about how to win in a very crowded market, right? So the first thing we're going to do is we're going to start with this statement here. The investor paradox is, and this is the paradox, ask for investment, and what you generally is get advice. And if you ask for advice, you probably might end up getting investment. So Ben and Mercy have gone in and said, please invest in us. Imagine if we went in the other way and say, hey, Ernest, we are a new company, we think we have something really cool. Instead of, could we have, just 5 minutes of your time to kind of get to know whether this is something that is headed in the right direction or the wrong direction? We would really appreciate it. That is a non-confrontational way. You didn't ask for a lot of time, and you probably might get a lot higher chance of getting a response from that email or phone call compared to everybody else who's just saying, listen, we hear you have money. It's pretty much almost like a raid, right? Nobody wants to feel as if people are in their pockets, right? So if we are going to build a fundable company, here are the few things that I think we need to look at right away. The first thing is we need to look at industry. So I had, industry is tricky. Most of the time you have to have a plan and a problem big enough for investors to be excited about. If Mercy today decided to do, let's say, a nail salon, right? A nail salon, and this nail salon only does the pinky and the thumb, and we only do color red, right? There are very few people who want a nail salon that only does, something that very few people want. But if you started a nail salon and you said, our nail salon does everything, and we are doing 50% off on every particular procedure. Now that means anyone in Nairobi is probably going to want to be your customer. And that's the difference that you find. Some people get into industries that don't have many customers. So before you start a company, or as you're thinking through your company, there's something that is called your market size. That's how many people in the world would want whatever you're offering. Now, Facebook has, I don't know, 2 billion customers, maybe a little more. That's something that is, it has scale, people want that. Meanwhile, your nail salon that is only doing 2 fingers and 1 color, there's not very many people who want that. So looking at industries that have a good chance of succeeding is something that I would encourage you, people to think about, especially young people. Now, if we look at who are the rich people in Africa, right? We have Dangote, and he made all his money on rice. You have kind of like the Uhurus, their money is in milk, and you have the, Chandarias, their money is in toilet paper, right? So you can tell that there's a saying that says, if you sell to the masses, you get to eat with the classes. Find a problem set and an industry that you probably, that will have a lot of people. The second thing is team. Now, this is probably more important than any other point here. Most businesses in Africa are owned by one person. And most businesses that succeed globally are probably owned by more than one person. So what does that tell me? It tells me that if I am starting a business, there is a good chance that probably from day one, I need to find a co-founder or somebody to build the business with, right? And how do I find this co-founder? If Ben is really, really good at, let's say, marketing and finance, and Mercy is really good at ops, Now you're starting to create, you find somebody who's bringing something that you're not strong at, right? So for me, I'm a really good visionary. I am someone who knows how to set a vision, build a team, but I'm really, really bad at ops. So any business that I want to get in, the first thing that I want to do is try and figure out, who do I know who's good at project management, ops, and things like those, maybe finance, that I can bring alongside me so that our company is, protected from that angle, right? As the company grows, so when you start out as the first founding team, it's probably only 2 of you guys or 3 of you guys, or even 1, but smart teams are always growing, right? Then traction. Traction is trying to get your product market fit very fast, right? This is trying to make sure that if you are doing this nail salon we're talking about, we need to figure out, okay, what color nails do people want? If people want red, blue, and green, we don't want to go and buy a bunch of purples and yellows, right? So get testing out what products your market wants is something that is super important. Then structures. This is something that everyone looks like. If Ernest is gonna invest in your company, they will come and look at, is your business registered? Are your books okay? Who are your customers? Do your customers like you? Are the founders getting along? Is there a structure for them to know how many shares one owns and what the other owns? So those are the structures that investors look out for. Now, we need to look at source of funding, and I'm going to go now a little bit quicker here so that we can get a longer question and answer. Your source of funds generally are your first source of funds. If you look at the bottom, Ben, can you see yourself, friends, and family? Is that legible? At the bottom of the screen.
Yes, we can see yourself plus friends plus family.
Okay. Yes. So when you first,
individual.
Yes, when you first start your business, generally, like, you're a little bit on hustle mode, right? So you're trying to find money for wherever you can find it, and the easiest place to find funding is probably in your networks, because those people know you, they trust you. And if they don't trust you, then nobody else should be trusting you. You see how that goes? It's kind of like you need to convince a few people to jump on the ship or your train so that you can move to the next level. Then you have, if you look on the left-hand side, you have kind of like your USAIDs and no funds. A lot of these kinds of companies write grants, and some of them write equity. So this is a company that says, okay, we like what you are doing. We know you probably are not making a lot of money right now, but we will fund you to get you started so that you can move on to the next level, right? On the right-hand side of the slide, you will see companies like Alibud or Startup Bootcamp. These are companies that do acceleration or cohorts, where you go in and somebody shows you a little bit about how to create a company, and then they will invest a little bit of money, to get you to the next level, right? Now here is something that's interesting. The golden rule is he who has the gold makes the rules, right? So as you're raising, you need to figure out what your investors are looking for. So if an investor is looking to fund businesses in energy and water, if you come with a nail salon, there's a very small chance that they're gonna invest in that company. However, if you do your homework and figure out, okay, we know this one funder, they're looking for a company maybe with a female founder, so our company already has one female founder. They like fashion and self-care, they want service-centered business. So that's easier for you guys to go for that funding instead of going knocking on every door and figuring out, oh no, those guys only invest in energy, those guys only invest in education. So doing your homework from the start is really, really important to align yourselves with whoever is investing. So these are your commercial investors. And commercial investors are different. So knowing what I was talking about is the fund behavior. These are just names of investors, so don't worry about too much about who they are and what they are. But because I've spent enough time in the space, I know if I want to do energy, I'll go to Cross Boundary. If I want to do debt, I'll go to AHL. If I'm doing something that has a lot of impact, I'll go to Novastar. So every one of these funds has, if you go to the website, they kind of tell you what they're looking for. So it's so easy once you know where the funds are to know whether they align with your mission and the company you're starting. This here is a little technical, but I think you guys are all smart enough you can understand. So when we invested in our company, we got our dads and uncles to put that money. That's called an angel stage company, right? So those are your angels. They just put money in your company. Then the second stage is a pre-seed. This is where you might call a few institutional investors. Seed is generally where you get your first real investment. Yeah. In Kenya, the average seed is about 50 million Kenya shillings right now. But for you to get 50 million Kenya shillings, your company needs to be doing revenues of maybe, let's just say 10 mic a year, right? So you see, you need a lot of angels to be able to get your company to get to that, at least to that 10 million a year. Then the rest, Series A, Series B, that is just, the more times you raise, the more the company rounds are named, right? So it could go A, B, C, D, E, F, Then private equity, these are guys who just come and buy you out. Some of the companies that you guys might know, I think Market Force, you guys talked to Tesh a few weeks ago. Remember that? So Market Force is one of the companies that I've been working with for a while. Twiga, you probably have heard about. Cellulant is one of the older tech startups we have, and they've done very well, right? The last round I think Cellulant raised was $50 million, which is quite a huge amount of money. So Market Force right now is in the seed stage. Twiga is in Series B or C. Cellulant is now getting into the private equity space. And what the private equity space does is just a lot of money. And they're the guys who come in and say, okay, Java has been good for 10 years. They're making money. Now we want to buy them out. So and that's how now the founders, you, Ben and Marcy, this is when you make your money, right? So you've been working at this company for 10 years. You started Java. It was a small company. You've worked at it. You got a few investors. Now that you have, 50 locations and everybody's happy, a big private investor will come in and say, you know what, we are going to buy 70% of the company for 15B. So of that 15B, you're going to take 10B probably and pay off the original investors, your uncles, your friends, the venture capitalist. Then probably as founders, you'll have now 5B, you'll split it, you'll go buy a house in Malindi and never talk to us again. That is how kind of like this particular game is played. So some of the private equity deals we've been seeing around is Java, Good Life, Naivas, QuickMart. If you guys have been noticing, Naivas and QuickMart are really, really expanding fast. Is because right now they're in a fight. They have a lot of money and they're in a fight of who's going to become the biggest. And when you get your company to the private equity stage, you lose a little bit of control because private equity is all about domination, right? They want you to be the biggest of anything, from day one, Okay, so that is a quick just rundown of kind of how funding is done. Now, there are a lot of questions that come around funding, yeah? So I'd want to stop there because that was a very like high level kind of speech, and get into the questions from the team on funding your startups.
Absolutely. Thank you so much, Peter. That was super brief and comprehensive. I think I'll ask you a few questions before I give the floor to Marcy so that we can get more questions from the audience. Now, your firm is a venture capital firm. Now, in the simplest terms, what is venture capital and how does it facilitate the growth of startup companies?
Cool. That's a good question. So I'm going to answer the venture capital, how it works. Again, all of you guys are super smart, so I can get a little bit in depth. Venture capital does this. You know, now I'm going to pick up on somebody else, Abby. So Abby wants to start a venture capital company, right? So Abby says, I'm going to raise 500 million Kenya shillings for this venture capital fund. So she will go and talk to Centum, she will go and talk to Bilha and Baire, you know, people with money, and she's gonna get that 500 million in a bank account. Now, what that money is gonna do is they're gonna write each other a contract. They're gonna say, you know, we trust you, Abby, to go and invest in however many companies that you will invest in, but after 10 years, we want our money back, right? So that's really a venture capital funding tool. So she's gonna take that 500 million, and because Ben and Marcy started a company, she's gonna come do some diligence, make sure you guys are fine. Remember what we talked about structures. Then she's gonna throw in there, you know, I don't know, 5 mic, right? Now she will do that for another 20 companies until her money is done. And then she will support those companies until maybe year 7 and 8. Then she will try and sell that company to get her money pay back the original people who invested. So in short, venture capital is a kind of asset class that funds startups by you know, by just valuing the startup and saying, okay, if we give you 5 mic, we think your company is worth 50 mic. Now we are taking 10% of the company. I don't know whether that's good enough for you, Ben.
Yeah, I think it's good enough, but maybe a follow-up. Now, looking at the venture capitalist ecosystem in Kenya and maybe East Africa in general, do you think that we have enough support actually for young entrepreneurs?
Yes, we do. Oh my God, that's a technical question. I think we have enough support for certain kinds of companies, right? And let me say, if you are creating a world-class company, right? This session, for example, is sponsored by WorkPay. If you look at WorkPay, that's a world-class company. Their product is going to be used in Nigeria, it's going to be used in South Africa. It's a good tech company, and it's got really, really good founders, right? So them, I mean, they went to Y Combinator, which is the world's best accelerator. I use that word best lightly, you know, probably world's most known accelerator, and they've raised money from different countries, right? So I would say, Ben, to your question is, if you're going to create a company, create the best world-class company that you can, and the money is going to be there. If you are not creating a world-class company, then you might struggle to get venture capital.
Absolutely. Now, let's take a tangent a little bit. Now, statistics has it that 3 out of 4 startups fail. Now, before we get back to venture capital, why is this the case?
Because it's a tough world, right? They remember the things we talked about. In my experience, some people don't go into the right industry and they'll fail. Some people create the wrong teams, right? So if you, and Mercy starts fighting 3 months after you've raised money, the company might end up failing. It's like a marriage, right? So if the partners who started the company are not getting along, and I've seen a lot of that, sometimes it's competition. You've seen many kiosks that were next to somewhere where Naivas came, right? So you are kiosk, you're doing well, Naivas pops their supermarket there, everybody runs away. Sometimes you just don't get product market fit. And other times it's just bad luck. Corona comes and you are a restaurant business. I mean, so the death of startups is very high. Just be prepared for that. All of us, we are super positive about even my own company, Alibaba. There's not a time that you can be super comfortable like you're going to be there forever. Let's talk about a different way to look at it is if you look at the Dow Jones or the S&P 500, which are the biggest traded markets, or even Nairobi Stock Exchange. If you try and find a company that's been there 100 years, you will struggle, right? Because even the biggest companies, 100-year companies, you have maybe 3, Coca-Cola, IBM, and who else? It's just, running businesses is tough.
Oh, wow. And, your company is approximately 3 years old. Now, 3 years later, how many startup companies have you supported?
So I used to support a lot more companies than I support now, right? So they're in the hundreds, right? But now I am doing something a little different. I want to support fewer companies, but companies that have a much higher chance of succeeding. Yeah. So when we work with Africa's Pocket or Market Force or WorkPay, these are companies that we believe in, and we are trying to make sure that the support is there for what we said before. If we are trying to create world-class companies, let's try and support world-class companies. Now, as far as the support is on education or just normal support, that's what I'm doing here, right? I want the young people to know that they are supported. I want them to have the best information. But as far as kind of like high-level engagement, they become less and less just because of opportunity cost.
Absolutely, thank you. Now, I want to quote an interview that you had on a podcast, and you were quoted as saying that every year we almost double investments coming to Africa. $2 billion over the COVID-19 period, but the money isn't finding the right people.
Yes.
And you went ahead to say that there's a lot of money that doesn't find a home. Why is that the case? And how can young entrepreneurs as us ensure that we don't throw good money after bad money?
Okay, good. That's a very good observation and question. So the first part of the money does not find a right home. $2 billion, most of it is coming from other continents, right? So I think one thing that we need to do and promise ourselves is at some point we want more of the money to be coming from Africa, right? So we can put it in what we believe are the right companies. The second part to that question is, if you create companies that are not aligned to the funds, right? So when we started, we said every fund has an alignment, right? So for example, MasterCard has $2 billion for Africa, 200 billion Kenya shillings, right? And if we are 20 on this call, we can say we can start a company that actually can get this money, but we have to work the backwards. They only want companies that have a certain size. They only do, like youth employment and work, right? So as you're creating a company, it needs to be that. So if I started the best company doing telecoms, so the next Safaricom, there's probably no chance that I will get MasterCard money because the mission is misaligned, right? So let's find mission alignment. And the last thing is we need to build big companies. For somebody with $2 billion, they can't write a check for less than 1.5 B Kenya shillings. It doesn't make any sense. If they wrote checks for 5M, they would probably have to write for 10,000 companies. Nobody can monitor 10,000 companies. So if you're building a company, it needs to be big enough to take big checks. And that's, I think, where the big misalignment is happening.
Right, thank you. And now let's talk about legacy. I don't know if you believe in leaving a legacy. Now, what is your vision for the Kenyan venture capitalist ecosystem? But only you have one.
Yes, I have a legacy, and you're making my legacy small. My legacy is not going to be Kenya; it's going to be global, right? So yes. And this is not to you. So the legacy here is, 100 companies, in 10 years. That's put in our company mission, and those companies have to be big companies to where when you look at we need to grow up in a way that we can be proud of, right? So today, most of us are using Instagram, we use Facebook, we use Netflix. These are all companies that are designed elsewhere and come here. So my legacy, hopefully, is that, one of the workplace and market forces makes it to Asia and, other parts of the world. They use it, it's a good company. And someday when people say we are using Market Force, for example, they don't say we are using Market Force from Kenya, they just say we are using Market Force because it's a global company, right? So the idea here is creating global companies. Two is creating those global companies to become big enough to invest in young entrepreneurs like you. So if you say, okay, Bill Gates is an investor and Elon Musk is an investor, Warren Buffett are investors, these are all American people, right? I want to be able to say, okay, who are the people who made their money through venture capital? They've exited, they have a bunch of money now, and they want to invest in the next cohort of young individuals. I think that would be a really good legacy to leave behind.
Absolutely, brilliant. And now to the last question before I hand over the floor to Marcy for more questions from the audience. Now, briefly, future of startups in Kenya?
Real estate is not as interesting as it used to be 10 years ago. So you're starting to see people diversify their investments. How to approach, if the question is how to approach, when you design a company that is interesting enough, then it's easier to tell high net worth individuals to invest. There's something that we talk about all the time. Most companies are storytelling at the beginning of the company, telling the story concisely, making it interesting and showing that you will give back a return. The convincing part, as a founder of a company who's looking for funding, this is good and bad news. You spend most of your time convincing people things. So if you're not good at convincing people things, then maybe that's the first thing you should find in a co-founder, is somebody who actually knows how to convince people things, because it can be taught, but sometimes some of these are just skills that are easy for some people, how to convince people.
Maybe you could share more on your journey of the categories of funding you had used, because you had said the first start is family or high net worth individuals. So I think there's that aspect. How do you network if that's your first and only option at the moment? And then how do you target to be successful in the series of funding A, B, as you move on to C?
Good question. So personally, the two places that I've always tapped for funding is everyone knows who's a high net worth person in their network, right? So it will be different for Ben, it will be different for Marcy. In your family, your friends, your professors, whoever you'll go to ask for help, right? Remember what we first started saying, never go to these people asking for money. Go to all of them, say, hey, I need help. This is what I'm thinking. What do you think about it? anytime you go to people asking for money, it's a harambe. Nobody, I mean, we have enough of those going on. So when you get people to support you in your idea and they grow with it, it's easier for them to say, oh, you know what, this I think is something that's going to work. Let me know how I can help. Maybe I can bring, So I have a friend right now who's raising some money for her company. And what she did is she got her mother, who's, a businesswoman, to invite her friends, and that's how they did a party round for their angel stage. The other thing that most people don't do, and some of our most successful companies like Africa's Talking did, maybe even some of the founders of Pezetu, is finding money that you already have, right? So most of us will not start companies maybe on day one. Maybe some of us will go and work somewhere for the first 2-3 years of our career, right? So I always advise people, if you actually can work for a really good company, even if they're not paying much, go there and get the structures for how to run companies, right? Because if you're going to run a company, you need some of these structures. I'm a little bit of a hard head. I should have done more of that. I didn't do too much. But I still see a lot of value in that. Then when you're working with that kind of a company, you can save some of that money and use that money to set up your company. Let's talk about Tesh at MarketForce, who again supported you guys a few weeks ago. So they already had a company coding, and they sold some of the software that they were coding to fund their newest venture, right? So you have to be creative, right? Remember when you said like 3 out of 4 companies are gonna fail? Maybe something we need to say is that some of them are failing because they're not creative, right? So if you want to succeed in this kind of venture capital world, then you need to be able to be creative at the beginning. Once you're done with your friends and family and now you're going to the seed round, there it becomes, it is your job to kind of, do good presentation decks, PowerPoints to tell the story of the company, then find which investors invest in your size of company, and then, pitch to them, right? There are programs through Growth Africa. There's a program through Antler. There are enough programs where you can actually go learn how to transformational business network. I'm sure Pezetu is doing a lot of the work. That's why we're here. So being even in forums like this a lot, make sure that you keep learning and learning and learning how to do that. Then once you're done with the seed stage, at that point you might even have some, money to hire somebody to structure your Series B and C better. I think that's how to do it.
Thank you so much for the insight. So there are 3 questions already. From Charity, we have a question. Being an investor yourself, what do you usually look for?
Very good question. At Alibad, we only look at 2 things: the team and the traction. That's it. It becomes really easy when you see a team and you say, okay, this team is educated around the problem they're solving. They gel well together, and they're solving a problem that it can scale and grow. And the traction is what we talked about earlier. Traction, you can't cheat traction, right? So if you decided to sell Ngumu on the side of the road, and all of a sudden, there are 100,000 people on the side of the road buying your scone, right? You can't cheat that. It shows, like your M-Pesa statements and your bank accounts will show that. So we look at those 2 things. The other things you can actually fix and design around, but that's what we generally look for. Thank you, Charity.
We have another question from Stacy. What usually determines the business idea that you will follow, beyond the traction and teamwork, which is usually the most common factor, is there any other special factor that would convince or sway? Because there can be many companies with traction and with a good team. So what would be the X factors that would make or break your decision?
So sometimes passion, those are the kinds of things that are X factors, right? Things that are beyond something you can put on a spreadsheet, right? You can't quantify passion. You can't quantify grit, hustle, right? And some of the guys you see out here, man, they are out hustling everyone, right? And sometimes it might even be contextual on even country. And so sometimes we're like, man, when I go to Nigeria, those guys, man, they're working many more hours, they're hustling more, so sometimes it's just kind of like X factor is just things that we know, but some people really live them, right? So passion, grit, hustle. Another thing is just kind of like good, being a good human, right? So people will support someone who's trustworthy. They'll support someone who they like being around, So there are a lot of X factors, but I still stick to team and traction. Thank you, Stacy.
Okay, another question. What advice would you give to someone who's still on the drawing board and trying to structure? So this is moving your idea to a viable business that can attract investment. So for someone who's probably 18, 19, 20, so they're starting out, they're doing the idea, they're drawing the team. So what structure principles would make them investor ready?
That's really, really good. So first, I would ask myself, okay, is this something that I need to be doing by myself? I'm still a huge believer that nobody should be starting some of these businesses by themselves, right? So can I get somebody else to come alongside me and be a co-founder or partner in this business? If I was kind of like in idea stage, I would try and figure out, okay, on this idea, is it something that I can make, or what can I do to pilot to kind of like get it to the customers really fast, dirty, cheap, and get some feedback from the market about what they think about it. Some of the saddest companies I've seen is, what we are talking about. You start a nail salon company doing yellow and pink, and everybody wants red and blue, right? So getting some of those questions answered upfront saves you a lot of time. If you're really not being able to get your idea completely fleshed out, there are a lot of you probably can do kind of human-centered design, process of eliminating certain ideas based on, and that you can learn how to do it online. Yes, I think this is a difficult question, but I think you can solve it. The first thing I will do is kind of try and do a little pilot if you have some of these ideas to see how the pilots go.
Great. So I think the main things you mentioned is having the market research right, the team right, someone who's maybe doing a charity movement. So maybe this is a question on social enterprises. And so does funding only happen for the business ventures? But what about those who are in the social enterprise space?
Good question. So the social enterprise phase you have to get for social enterprise type funders, right? A venture capitalist will not touch anything that's not for profit. That doesn't make it right or wrong to go into the social enterprise space. I think these days it's good because some social enterprises have a for-profit mechanism, right? So you can be a social enterprise with a profit. But if it's a non-for-profit, then I probably will stick to grant funding and other kinds of funding that don't have profitability as a prerequisite. But good question.
Okay, I yield the floor back to Ben. If anyone has any other question, I think you may raise your hand. Thank you. Ben?
Absolutely. Thank you so much, Marcy. I think I should just keep the ball rolling. Now, Peter, most early stage companies have a good idea, but no proof of concept. Elaborate, please.
Yeah, you can't really say it's a good idea if it doesn't have a proof of concept, right? It's just so it's what I said when we first started, right? Everyone will come and say this is a really best idea, right? Now, 99% of the businesses a venture capitalist will see, they've seen before, right? So the reason why Java got the money and not Art Cafe, or Art Cafe got the money and not somebody else, it's not because one idea is better than the other. Again, it's all team and traction, right? Ideas have to be proven. There are some ideas actually that get funding before they've had any proof of concept, but that means the founding team needs to be really, really smart. Most of those teams have done something before. I'll give you a good example. The Twiga is a company we know as a startup. They did very well, kind of like doing distribution of products, vegetables and stuff. You know, one of the co-founders there started a new company after he left Twiga, and that one was funded before even they've done proof of concept, right? But it's because they already have created a $200 million business, you know, in 4 years. You know, that's somebody you might want to back. But for most of us who've never had any previous business before, venture capitalists don't want to be the ones who are paying for your education of learning how to build a company. You know, you have to meet them halfway. And that's where kind of like the proof of concept comes in.
Absolutely. Thank you. Now, let's get a little bit anecdotal here. Now, you've said before that growing a company is like raising up a child, right? Now, what is the food? What is the shelter? What is the clothing?
Okay, that's a good question. Actually, probably one of the better questions today. So the company, so let's start a new company. I would like for somebody to suggest a company. Okay, let's take Ernest's company, a milling company, right? Maybe let's engage him a little bit now. So you have a milling company, and right now it's just Ernest and I decide, okay, we want to do a milling company. So the first thing we do is try and figure out, okay, for milling, what are we actually milling, right? So we say, okay, is this particular product that we're milling needed in the market? So we go in and say, okay, if it's timber or if it's unga, we'll say, okay, Kenya does this many metric tons of this particular product. And we think that we have this advantage. You know, maybe we do it closer to the source. Maybe we have an uncle with a huge supply of whatever it is. You know, whatever our advantage is, we'll figure out what that advantage is, right? Then we will try and say, okay, let's get quick product, right? So we'll go and mill just a little bit and send samples out. That stage is your child stage, right? There's not, you know, this company is not going to pay you a salary. It's probably mostly sweat equity, and you probably need a mother somewhere who's funding you. So that's your high net worth individual or yourself. You know, that's basic level of the company. Now let's imagine now we got, you know, we were lucky, we got, you know, 5M. Now we are serious operation right now. So what's the next stage? Right now we are probably a kid that is walking. So what we need to do is make sure that this kid is walking, going to school, learning, you know, eating well. So we'll try and make sure that, you know, the people who are working for us are trained. The product that we are building is always improving. The employees are happy when they come to work. We are paying our bills. We are raising more money. Then we get in probably teenager stage. This is a point where now we raise 500 million. Now we are no longer small. We are no longer kids. Now, a decent sized company. And now with this 500 million, what do we do? Now we are going for world domination. We are making sure that when we are on the shelf, our packaging is better than everybody else. We are advertising. We have influencers. There are all these things as, sexy and sell. Then maybe we even get 1B investment at some point. Now at that point, we are grown up, right? So what you're trying to do at that point is not only build your company, is now we have Crispin come in and he wants to start a milling company. So part of our money is making sure Crispin doesn't make it, right? So you come from, so there are all these things, and then at some point you're old, right? So when you're old, you're like, man, we are getting old now. You've gotten 100B, you're the biggest milling company out here. But then you're like, oh, Amazon and Walmart are about to come into the country. The founders here, me and Ernest, all we want to do now, is just kind of like enjoy the fruits of our labor. So what do? We find those bigger companies who are trying to get into the market. We sell the company. They give us, 3 times our investment, 300B, for example. We pay the 200 to the original investors who invested. We take 100, and now, we run around the continent doing shows and, investing in other companies. That is our kid from birth to wherever. Now, here's the crazy part: is based on your statistics, most of us won't pass teenagerhood, right? It's just the reality, So there you are.
Wow, thank you. I think so far you're the best person to actually explain anecdotes and analogies. So I'll give you one more: the chicken and the exit in relation to what we're talking about today.
Wow. That's Ben, what you need to do is just send people that article because it's so in depth. I don't think we have the time to deal with it right now. But I guess what you're saying is it's many other X factors and pressures on taking venture capitalist money. So again, most people need to know the minute you take somebody else's money into your company, they're now owners of your company, right? They might own 10%. It's not a lot, but they're owners. The next time you take money, now you've sold 20%, 30%. Now, Mark Zuckerberg, Elon Musk, Ken Joroge, Tesh, all of them, you have, if you're gonna create a global dominating company, you have to take other people's money, so knowing when to take it, who you're taking it from is important, but also knowing that someday you will have to be paying these people back, right? And that's where now that question comes in, is if you took money from venture capital, we will want this money back in 5 years, right? Then at some point in year 4, you might spend half your time trying to figure out, okay, how are we paying this money back and not growing your company, right? So there's also a downside to some of the times that you take money. That's why I keep saying, hire the smartest team. Maybe this is something that at this point you have a CFO or, somebody else who's technically spending most of their time thinking about how you exit. Yes.
Absolutely. Thank you so much. I think, Mercy, if we maybe have any more questions.
Okay, so I think in the chat box, the questions are over. 30 seconds. Anyone in the call, if you raise your hand, okay. Stacy, you may unmute yourself and ask. To the rest, if you have a question, quickly raise your hand. We shall note down.
Thank you so much for the session. My question is a simple one. As someone who is, has a lot of interest in different ideas, how do you pick which idea to follow to start a company with? And also as an overthinker, I'm just speaking for myself. I'm an overthinker who tends to stress over every small detail. So I get stressed over which business idea to follow. What will your advice be?
Is the question clear?
Stacey, good question. I would invite you to trust. I think the question was quite clear. So you have an advantage and a disadvantage. The advantage side, Stacey, is if you are an overthinker and a stressor, those are not necessarily downsides, right? It just means you kind of like know that there are some things that could go wrong. What I would do is turn those emotions and that value that you bring into the positive side, right? So if you stress, maybe do work for yourself to know how to know the stress, know how to act on the stress, and know how to use that stressor to make your company better. As far as ideas, having many ideas, I think this is a question that keeps coming back. There's nothing wrong with having ideas, right? You always want to have ideas and have many ideas. And the idea that I had when I was 10 about what I would do, and one that when I was 20 and when I was 30, like all those ideas are different, right? So having ideas is also not a bad thing, right? But at some point, you need to look at ideas from almost a scientific perspective and say, which idea is an idea that I think the world wants somebody solving that problem, and there's enough people wanting to pay money if I solve that problem, and I can get a co-founder who will join me in that problem, and I will be interested in solving this problem for many years to come. So I would get it from almost an art into a science. And then, sometimes you just kind of like by faith say, listen, I got 3 ideas, all of them are good ideas, but I can't execute on 3 ideas. So pick one, and once you pick that one, forget about the others and just really go hard on the one that you picked.
I think there is no other question, then you may close the meeting.
Before we do that, Marcy, I think there's a question here. So someone is asking, is there a way they can reach you so that they can invite you to the university for a session? And I think maybe you could, that's possible.
Hold up. What was I doing? Yeah, there. Is that okay?
Yes, thank you. We'll definitely share with the audience. Thank you.
Yeah, absolutely. And maybe lastly, if you can allow me ask just 2 very personal questions.
Yes.
Absolutely. Thank you. Now, you grew up in Kajiado, Masailand, and the various platforms that you've gotten to talk about your growing up. It wasn't a really good experience. You've gone through a lot of challenges, a lot of problems, but here you are. Now that you went through all those challenges and you emerged a winner, you emerged strong, how do you lend your privileges to other people as Peter?
That's a very good question. So let's start by saying my problems were big depending on some people and were really small depending on some people, right? Right now, if you say that I have made it, sometimes I show up to New York and I'm like, damn, I'm poor, right? It's just kind of like making it is relative, right? So let's start by saying the idea of success is very elastic, and making it is also quite, day by day, because sometimes you can make it from a bank account perspective and then your health is not good, or you make it, from a happiness perspective, then, so trying to have a well-rounded life. And that's why in my introduction, I say, I also spend a lot of time traveling and hiking and camping and, doing things that bring joy to my life, apart from just making money and world domination, right? So how am I lending that privilege? I think the first way we lend the privilege is, having traveled the world, is by knowing what is real and what's not, right? So a lot of times somebody will just fly from Singapore and say, you know what, we think we know how to build roads better than you. Half that stuff is not true, right? It's just somebody telling you, they do, and because nobody knows how to go check it, they haven't checked it, right? So I think half the privilege stuff is just knowing that, Africans have been solving problems for, thousands of years. They've been, in the 1300s, the richest person to live was in Africa, right? We controlled salt and gold, and, so I wake up every morning and saying I am as smart and I am as resourceful as anyone else in the world. We might have a lack of resources, but we don't have a lack of resourcefulness, right? So we can win. So that's the first way. It's all in kind of your perspective. The second way is, a lot of the companies that we are working with and the people that we support, we believe in our young entrepreneurs, 200%, like a lot. And that is a way to, bequeath our privilege, right? It's in little things like, if I want to, buy art. I used to buy art from all over the world, but now I'm buying art that is African, right? It's just kind of like there is a way to support, what is happening in the continent. Sometimes, if I was to do a webinar, I prefer to do this webinar than doing a webinar somewhere in Germany. And if I do it in Germany, it's probably saying, okay, listen, Mercy is really smart, come invest in her. So that's how we kind of like are trying to solve this privilege gap. And Ben, the last thing I'm going to say is while life has always been rough, right? It's not bad, right? If you look at me complain about milking cows, right? It doesn't mean it was bad. It just means that, some people were at home somewhere playing PlayStation, right? It's just kind of, it's me being a big baby. It's not like saying life was bad.
All right, thank you so much. I don't know if you have the time to take one more from Ernest. He had raised his hand.
Yes, I will.
Ernest, please. Just unmute your mic, make it brief. Ernest, do we have him?
No, thank you. I didn't have a question. I must have pressed something.
Ernest, let me ask you, what kind of milk do you have?
I think I've lost any. I've lost the microphone. I say it again, Peter. Sorry.
You said you have a milling company, or you want to get into milling?
I've started a milling for a maize flour in based in Nairobi, Kenya. So it's a new company.
Yeah.
And everything else, capital investment is already in place. So what the funding that I'm looking for is only for the raw materials. So I was wondering, when you're talking about this kind of, it's my first time joining you in this kind of a meeting, and I am so grateful. I've gotten a lot of knowledge in other businesses, but now this is a new business that is coming up. So looking forward to getting funds and be able to get a raw material and set up immediately.
How much money are you looking for? Wait. How much money are you looking for?
I'm looking for 50 million. That will be able to take on me to take me for 2 months to be able to buy maize. Yes, that is a raw materials.
Where are you selling right now?
We've not sold. What we've only done is just to put up the plant. It's a new company called Sabina Millers Limited. So the capital, the machinery, even the staffers, in fact, the staffers we recruited in the month of February. And so basically what I'm looking for is the raw materials.
Yes, so if you were to come to me as an investor for 50 million for your first batch, so there are two ways to look at it. One, a venture capitalist will probably want to see some traction in that kind of sales, right? So if you are saying 5 million, that's probably a different question. 50 million, and I don't know how big the miller is. You probably do need 50 million. I would see whether I can get that number. I think the traction part is what, Ernest, I think you need more than anything else, right? Because if you can show 2-3 months of being able to sell that quantity, it's very easy to get even like a inventory loan, because what you're looking for is not even money to keep the company afloat, it's inventory finance. Inventory finance is very different from venture capital money. And because you're in something that is in agriculture, there are a lot of people who are willing to invest in agricultural inventory finance. I know some, but you will still need to have to do a little bit of heavy lifting of kind of like showing some traction, where you're selling it, who's buying it, for several months to get some form of a credit score. I don't know whether that is helpful in any way.
Thank you very much. I think I've gotten what you've said. And as I was telling you that now this is a new business that is, it's like a sister company to the mother company. I'm also in medical supplies and cleaning material, which is under hygiene and safety solutions. So milling company is coming up as a baby company for the bigger company called Landmark Solutions Limited. Thank you very much. And I will email you, I'll look for you. I need that support. I think more than everybody else, I'm the first person to email you tomorrow morning.
Oh.
Thank you.
Thank you, everyone.
Wow. Thank you so much, Ernest. Thank you so much, Peter. I think these are the kind of outputs that we need, the kind of connections, the kind of networks. Well, of course, as we all know, your network is your net worth. And I wish you all the best, Ernest. I wish you all the best, Mr. Peter. And I hope, hopefully one day your name will be mentioned amongst the likes of Rockefeller, right? I hope that's a dream. I hope that's a legacy that you hope and aim to achieve. Once again, ladies and gentlemen, I want to thank you all for making it to today's meeting. Specifically, I would like to thank our partners, WorkPay Africa, Wezesha Kenya, and Mr. and Miss USIU Africa. And as the youth, please let us all leverage these opportunities to find our ideas, to start businesses, to start that particular thing that you want to do that will not only have an impact on you, the people around you, but the world as a whole. Ladies and gentlemen, once again, I want to say a big thank you. Thank you for making it here today. And hopefully we'll see you again soon. You can also connect with us on our various social media platforms. I think I'll leave that to Mercy. Mercy, please, could share our social media platforms or handles.
Yes, so this is not the last of webinars and engagements. First of all, please do sign up on our website, www.pezetu.com. Sign up there and join the community, whereby you'll be able to get updates on all the upcoming sessions. Also, we encourage you to follow our social media pages to get updates from our team. So LinkedIn, it's Pezetu Kenya. Twitter, it's Pezetu_KE. Instagram, Pezetu_KE. Facebook, Pezetu Kenya. As for our YouTube channel, you can rewatch this live. The channel is Pezetu Kenya again. And we do look forward to seeing all of you again in the next event.
Absolutely, Mercy. Thank you so much. I've been your loyal, soft-spoken host, Ben Bogle, and my co-host was the beautiful Mercy Nyaga. And see you around soon. Take care and have a lovely weekend. The happy holidays. Bye-bye.
Good evening, everyone. Thank you so much, Peter, for joining us.